Okay, on the analysis, we'll learn on horizontal analysis and vertical analysis. On the part of the horizontal analysis, let us consider an ordinary trader. And we look at what he or she uses or sees on his own chart every day. You use the indicators, and indicators are simply formulas that uses past data to predict the future. And you use the lines, channels, areas of support, areas of resistance. And in this case, they are effective to a certain degree. You also use the patterns, chart formations, the waves, and one cannot know in advance whether the price is going to interact with this pattern. See, sometimes price would form a pattern there, and then it would break it to find the next area of liquidity pool and then reverse. However, some patterns have proven to be effective, and those are the patterns that we have learned. So basically, when we do technical analysis, we analyze the market horizontally. That means we look on the past and the present. So what did the price do in the past? And what is price doing in the present? So that's what we are looking for. And now, from what we have learned, what should we be looking for in price in horizontal analysis? We have learned many things concerning price and how we should react in certain levels in the market. So we have basically learned the dealer sentiment, and we are far better than just ordinary traders. So in doing analysis, we first break down the time frames, and each time frame there are certain things that are specific to that time frame. So for the monthly and the weekly time frame, for the monthly time frame, it's good for positional traders. So if you're a positional trader, then your monthly time frame is specific for you. We look for areas of support and resistance, and here we are looking for the natural support and resistance point and the classical, the order blocks. And this support and resistance point should be near the current price level. And this is, we're doing this in order to determine the market structure. Also, EMAs can be used to easily spot target for price before reversal or target for to take profits. And the weekly is good for swingers, but the things we are looking for in the weekly are the same as the ones we are looking for in the month. So we look for support and resistance points to determine the market structure. And EMAs can be used to easily spot targets for price before reversal. And now, when you have the idea now of the long-term trend, the market structure based on higher time frame, now we come down to the daily. And at this level, we look for area where the dealers form the peak before the shift. And now the dealers formed a peak, maybe a peak formation low, and we have seen a shift. Now we are looking for the levels. Where are we in the levels? If we are maybe in the third level, we come to look on the targets now, where targets where there is a high probability of a reversal. So we are going to plot the order blocks. We are going to look on the internal liquidity areas. Here we are looking at the fair value gaps and voids of liquidity, position of EMAs, support areas and resistance areas that we have drawn from higher time frame. Usually, when you come to the daily, then you find they are around certain levels that have a high probability of reversal. So you should note that when you are doing your analysis in lower time frame, you should always have higher time frame bias. Like you should be guided with the higher time frames, market structure to know the market flow. Now on the hour four, after doing your analysis on the daily, you know where you are based on the levels and your targets. On the hour four now, so the levels that are in hour four time frame are the same as the daily time frame. So there's absolutely no need to count levels. In this time frame, we look on TDI, we look on the harmonics, we look on the order blocks, and here we can easily spot the breaker and the mitigation blocks. Also the position of EMAs, but here we specifically look on the 800 EMA. It's usually the target for reversal. It's the same as the 200 in the daily. And on the hour one time frame now, after having done our analysis, now we come back to the hour. And this is a very important time frame for any market maker trader and for any swinger, for any day trader. So it's an important time frame for any trader, we can say. So it is within this time frame where we determine the reset peak formation high, peak formation low. We seek on where price is in the market maker cycle. Where are we? Are we in level 2 going level 3? Because when you spot a peak and you always look to trade away from it. So if you're in level 2 going level 3, then you should only look for trade setups that take you to level 3. So we look where price is in the market maker cycle and determine the next level move. And we should also seek for next area of external liquidity, next area of liquidity pools, because those are the areas that have high probability of reversing. And these areas also affect our SL and our target for take profits. So if you see there is a high probability for the market to go to that area of liquidity pool, then it should be your target for take profit. And basically your anticipation of the next move in price should highly rely on higher time frame buyers. So those kinds of anticipation gives you a high probability setup. Now let us go maybe to Euro USD, or maybe Euro JPY. Or let's take Chef Yen. Let me have a look on Chef Yen on the weekly. So let's start with the monthly time frame. I usually use the line chart to plot this support and resistance area. So prices at this point, we have this as the previous high, and we have another high up here. So for the monthly, this is the nearest. And for the lows, now we have a low right there. Now let's use the candlesticks. So Based on the candlesticks we have, this was a return to the order block, and then price bounced. So we had a beautiful, this is like a shoulder, head, and this is a shoulder here. So this is a intermediate term low forming here, and this candle would confirm it. The candle close here. So the market structure is basically bullish here because of this return to the other block, and then we are going up. And let's go to the weekly. On the weekly time frame, when you look at this, we have a pin to the 13 EMA, and this is week beginning, but this area here, this is a formation of equal highs. So basically, for a good reversal, I would want price to come maybe around this area here. Where the EMAs are there, and it's near this block of orders. Because you can see here we have a red candle, green, and red candle. So the prices at this point are fair value, and this is like a block of orders here. So I'd want for price to come to this point and reverse. So this might be a weak beginning false move. And now, although on the monthly time frame we have a bullish structure, but here we have a bearish structure. See this basically equal highs there. And now let's come to the hour time frame. I mean to the daily. To the daily, we had a peak here, and we had level 1. We had the formation of the second shoulder, and then we had a very long level 3. And here we have 1, we have 2, and we have 3. Wow. So we have 1, 2, 3, we have 1, 2, 3. And the monthly time frame is showing that it's a bullish trend. So basically, this pin to the 50 here can be a good reversal, but see, this area here is very good. Although at this point, see this this gap here. We have a gap around this area here. So this gap is a vacuum block. So I was looking for any kind of liquidity that could trigger this move. So we have a vacuum block right there. So this move is good. So our bias based on the higher time frame is buys. Our 4, what is the, now we have a very good harmonic pattern there, bullish gap lay. Our TDI has not reached the level low, but we have a W here. And the shark fin. And the harmonic pattern is there to add for the confluence. Someone told me to analyze this JPY. So we had these reasons. So this is how one time frame. Now we look for, we had a peak here. For the peak, we have one, and the ADR is around 92. At this ADR, I do not trust this the ADR boxes that I'm drawing now, since price has moved around 2 weeks. Oh, so it's exactly at this ADR time 3. And we have a very good W around the blueberry. Very good. Wow, this was a very beautiful peak formation low. And here we had the initial low, and the dealer took it out of the reversal there, an ID50, and this is a solid gold ID50. And we had the first here, and this is the second bounce. Wow. So basically, this is a start of an uptrend, right? Are we together? This is a start of a good uptrend, and today to complete the ADR. Tomorrow we will expect for a stop and flow rise. And it can be around this high, stop and flow rise. Wow. So I can see how I do my analysis based on from coming from higher time frame going lower to lower time frames. So are we together?